G'day and welcome to Season 2 of Harvestable by AgriDigital. Our 8-part mini-series will feature raw and unedited fireside chats with some of agriculture's most insightful minds, sharing their perspectives across the grain supply chain. In this episode, we're joined by Campbell Roydhouse, founder of Ceres Alpha. Now, before we get started, a quick note to say all information contained on any AgriDigital podcast is for education and entertainment purposes only. It is not intended as a substitute for professional financial, legal, or tax advice.
Hi, this is Henry Walsh from AgriDigital for the Harvestable podcast for Harvest 22-23. Today we've got Campbell Roydhouse, the founder of Ceres Alpha, to talk about the macro situation for grains markets, in particular Ukraine and Russia, and the impact of that on futures markets. G'day, Cam. How are you?
Good, Henry. Yeah, good to be with you.
Before we get into some Q&A, do you want to just give the listeners a bit of background from early beginnings and what you're up to today?
Sure, no problem. Well, look, I've been in the agricultural trading business for over 20 years. I started work out of uni at the Australian Wheat Board. In those days, we had the single desk. But my last role there was on the domestic trading desk, trading the wheat book. Following that, I ended up getting offered a job with Louis Dreyfus Commodities in Singapore in 2007, trading their grains desk. And following that, I ended up working for Goldman Sachs, running their agricultural trading business from Singapore. More recently, a few of us in that team took our trading business outside of the bigger corporate model. We raised capital in 2019, and that led to the beginning of Ceres Alpha, which is an agricultural trading and risk management business based in Singapore, but I'm lucky enough now to be based in Geelong, back home in Australia.
Awesome. Great story. As I said at the beginning, we wanted to have a talk about Russia's invasion of Ukraine and the impact on the grains market, and the sanctions on trade flows and things like that. So, do you want to just help the listeners and sort of maybe backtrack a little bit to that time and the impacts we've seen over the course of this year?
Sure. Look, it certainly had a huge impact on the flow out of the Ukraine. If we look at the sort of the pre-war flow of grain, a lot of it, or the vast majority of grain and oilseeds coming out of the Ukraine went via the bulk freight market in the Black Sea, in vessels, Panamax vessels, etc. When Russia invaded Ukraine, access to that flow came to an abrupt halt. And basically stayed that way until the export corridor was negotiated in August. And of course, over the weekend, we find out that corridor is no longer available to the Ukrainians. So certainly had a pretty wild ride in terms of flow. To dig into a little bit into the detail of what that meant for the grain markets, when the bulk exports were shut off, the Ukrainians were pretty good actually at ramping up the flow of road and rail grain exports across borders to places like Romania and Poland, with a lot of it going via Romania. And the last few months, they were able to get up to around 3 million tonnes of total grain flow across borders by road and rail. When you look at the wheat situation, they've been able to get roughly 600 to 700,000 tonnes of wheat via road and rail out of the Ukraine without going via the ports. But we think that flow is pretty well capped at around 3 million tonnes, and it hasn't really been that focused on wheat. Wheat, unfortunately, has relied more on the export corridor out of the Black Sea via boat. So in the last 3 months, where they have had access to the grain corridor, wheat flow has ramped up to around 1.2 million tonnes a month. So from zero before the corridor was open to around 1.2. So the impact of this corridor closure over the weekend is quite significant for wheat, given that roughly 60% of all wheat flow in the last few months with the corridor open has been out of those ports. So if you put it into big numbers, I suppose, Henry, I think we've lost, with the announcement over the weekend, over the June-July or July-June shipping year, roughly 10 million tonnes of wheat exports, given that they just won't be able to get it out via the ports. But there's a few assumptions there and a lot of moving parts. The assumption is that we don't open that corridor again, or we don't get a resolution in the war, or something else doesn't happen. But under that assumption, the flow of wheat has been impacted significantly over the weekend and from the war, which began back in March as well.
Yeah, it's dreadful in terms of the impact to people that were counting on that wheat, especially after getting it reopened not that long ago. In terms of the sanctions that have been on Russian wheat and how that's impacted where Russian wheat has gone, and also the ability for Ukrainian wheat to be reclassified as Russian wheat and come out in a different way or shape or form, do you think that holds any hope for sort of more liquidity in the export market, or it's unlikely at this point?
Well, I think the sanctions, it's been difficult to determine what that has done to the destination of Russian and Ukrainian wheat and corn. We unfortunately, with the war, came a lack of information, particularly on the Russian side. So we're not really sure. But what we have seen is Russian wheat getting out. We're forecasting roughly 40 million tonnes of Russian wheat will get out during the shipping year, which is a good number. We do know that 2+ million tonnes of Ukraine wheat has been stolen. That's a rough number, but it's certainly a big number that has come out of the conflict zones back into Russia. And I suppose the risk is there that we're double counting some of that grain, but we just won't know for a long time how much that is in terms of quantity. But look, I don't think the sanctions have had that greater impact really on the flow of food product. I think crude oil, etc., would be different, but we haven't seen a huge impact in terms of destination anyway.
Moving on in terms of plantings and productions for the season that's just passed, I suppose, and then the upcoming winter plantings in Ukraine, or just in general in the region. How much do you think that's going to be impacted? Because obviously trade flow has been impacted, but production has been as well.
Trade flow has been impacted, as we said, but I think that the bigger impact here is on acreage loss in the Ukraine, and this impact won't really be felt until next year because we did shut the ports off. The stock situation obviously has gone up in the Ukraine, but what we're predicting is a sharp decrease in acres. I think before the war, say 21-22, the Ukraine harvested 7.4 million hectares of wheat. In 22-23, that's fallen to 4.9, and 23-24, we're forecasting another fall to 4.7 million hectares. So we've lost from pre-war to this planting campaign, which is just winding up, 2.7 million hectares, which is a huge problem for the global, or for the Ukraine in particular, but also for the global wheat balance sheets moving forward, because you can't get that acreage back. They tend not to grow spring wheat in the Ukraine. It's a winter wheat crop. But look, the other problem they've got is there's a lack of labour. Obviously, in the conflict zones, it's difficult to plant anything. The inputs are difficult to get. Fertilizer is a problem, and chemicals as well. So we're also forecasting a cut in yield from something like 4. They normally would get above 4 tonnes to the hectare in that part of the world, down to more like 3.75. In 21-22, they were 4.45, down to 3.75 for this coming season. So the crop's gone from 33 million tonnes in total down to a forecast of roughly 17 for 23-24. So obviously a massive reduction in production out of the Ukraine.
And do you think it's been an equal impact across all crops, like corn and some of the oilseeds and sunflowers, etc.?
We think, look, probably more impact on some of the more specialty crops that need more intensive fertilizer, like corn, for example, tends to use more nitrogen. We think that may be more impacted than wheat, sunflowers as well. So I think everything will be impacted, but probably some of the specialty crops that require more inputs will be more impacted, I would think.
I suppose before we move on to some of the other secondary impacts, you have mentioned fertilizer a couple of times. Obviously, that market went a lot higher post invasion and then has dropped a long way. Sounds like the outlook's not that favourable, at least from a farmer's perspective.
No, I mean, when you cut off China, you look at global nitrogen flow. I mean, Russia and China were 30% of that flow, and both those markets have shut off exports. So I don't think the fertilizer problem has gone away, positions during that time. But at a higher level, I just ran the open interest chart for the Chicago, which is generally the one people focus on, and the aggregate open interest, which is across all futures contracts, pre-war was hovering around 450,000 contracts. After the blow up and the invasion, we went all the way down to sort of, towards 300,000 contracts of open interest. So certainly the numbers tell you that we lost a lot of participants in the market after that situation in March, April, and more recently it started to bounce back up a little bit. So it looks like people are starting to come back to the market and use that again for the reasons they need to use it for.
Yeah. Do you think then that means there's just the whole physical market's likely to become more shorter term, in the sense people won't want to take more deferred risk and be able to hedge it with derivatives, do you think?
I think so. I think unfortunately, when you have those problems in the market and a complete dislocation from cash markets, people lose faith in using global futures as a hedging tool. I think that's a mistake, because those that got out, it probably got out at the wrong time during that blow up. In hindsight, it was actually a terrific hedging opportunity, but obviously you've got to be able to fund your margins and manage the P&L of those positions. But often in hindsight, those situations look like a great time to hedge your physical positions.
And just to wrap up, obviously we've had some issues here in Australia with flooding. We've gone from drought a few years ago to flooding now. Do you think that is well understood by the global grain markets at the moment, or its focus is so much on Ukraine and Russia, it's sort of getting forgotten?
I think it's been overlooked a little bit, Henry. I think that participants in our grain markets, futures markets at least these days, are more macro, CTA type participants rather than fundamental traders. I think the percentage of trade now that are fundamental and run balance sheets and really drill down on quality, for example, in Australia, is a much smaller part of the market. But I think it's quite a big deal. The quality, whether it's a big crop or we're losing some production, the quality is certainly going to be a challenge, and that doesn't help solve the milling weight shortage that we can get from issues like Ukraine and other problems we've got around the world.
All right. Well, I'll leave it there. Appreciate your time, Cam, and thanks for the update, and I'm sure the listeners will enjoy it. So speak to you later.
No problem, Henry.
Thank you for listening to Harvestable by AgriDigital. We hope you enjoyed this fireside chat and see you next week for another episode.